Canada's housing market is flashing red. Resale prices are forecasting to drop 3.5% next year, and the slowdown has already started. But here's the twist: Ottawa isn't following this script. While the rest of the country cools, Ottawa is holding strong, and that has massive consequences if you're buying, selling, or investing. Stick with me because this video, you'll find out why Canada's housing market is stalling out. Number 2, why Ottawa is defying this trend. And number 3, how to actually position yourself to win as you head into 2026. And trust me, you're going to want to see what's happening in Ottawa's townhome market and why condos could become the city's biggest surprise. Let's dive in right now. RBC just released its forecast, calling for 467,100 existing homes resale in 2025. That's a 3.5% drop from last year, according to Global News Report. Here's the kicker though, 4.1% of that drop has already taken place in the first 6 months of this year. The market is slowing faster than expected, but the outlook isn't all doom and gloom. RBC also projects a 7.9% rebound in 2026, with sales hitting over 500,000 at 504,100. Although that's still below the pre-pandemic 5-year average at 511,000. On pricing, a modest 0.7% increase in 2025, followed by a 0.7% dip in 2026, especially in Ontario and BC, where inventory is swelling and buyers hold more leverage. This slowdown isn't random. It's tied to the real headwinds. The biggest, trade uncertainty with the US, is denting consumer confidence. Reuters says home prices could fall under 2% nationally in 2025. Job insecurity is creeping up. Buyers are hesitant to stretch because they don't know if their job is still going to exist. And immigration, once a housing market tailwind, is starting to ease. That means less upward demand pressure than we've seen in many recent years. All that combines into a softer sales process and more cautious buyers sitting on the fence. Here's where it gets interesting though. Ottawa doesn't move like Toronto or Vancouver. Our job market is anchored by government, tech, healthcare, and education, and it's far more stable. And our average home prices are around $695,000. And our average home price is sitting at approximately $695,000, sitting well below Toronto, coming in just over $1 million, and Vancouver at $1.24 million. While national headline screams slowdown in the real estate space, Ottawa is telling different story. Even as national resales are trending down, Ottawa's activity is holding up quite strong. In July of 2025, Ottawa recorded 1,300 home sales, a 4.9% increase year over year, slightly lower than July. In July of 2025, Ottawa recorded 1,318 home sales, a 4.9% increase year over year, though slightly lower than June. Year-to-date sales from January through to July hit 8,704 transactions, up 3.1% compared to 2024. Average sale price in July came in at $695,209, a 2.2% increase year over year. The benchmark price rose almost 2% at 1.9% year over year to $633,100. And here's the major takeaway. Townhomes jumped 8.3% year over year to a benchmark of $468,000. So the translation, the interpretation, buyers are still active. And Ottawa is not retreating the way national numbers suggest. The second story is inventory. New listings in July rose 11.7% year over year to 2,549 units. active listings hit 4,205, up 14% from last year and nearly 24% above the 5-year average. Months of inventory sits at 3.2%, firmly in the balanced market territory. Sales to new listing ratio sitting right now at 52%, right at a balanced market range. This isn't flooding the market, nor is it time for seller frenzy. Ottawa is showing balance and something we haven't seen nationally in years. However, not every property type is performing the same. Single family homes, the benchmark right now in Ottawa is $704,800, up 2% year over year. Townhomes, the clear winner by far, up 8.3% year over year. Families, first-time buyers, and downsizers are all competing in this segment. Condos, this is the soft spot in Ottawa. Benchmark is down 1.6% year over year at an average sale price of $411,900. Demand is cooling in this segment as buyers pivot to more space and no condo fees. So Ottawa isn't one story. It's 3 micro markets. And if you're buying or selling, your strategy has to reflect which one you're in. So why isn't Ottawa slowing down like the rest of Canada? Well, we have stable employment base, federal government jobs, keeping income stable. We have relative affordability. Ottawa offers discount compared to Toronto and Vancouver. We have balanced inventory. Listings are up, but not overwhelming. Townhome demand. This segment is carrying the market, driven by buyers who want value but do not want to compromise on space. So what should Ottawa buyers or sellers or investors do in this market? Well, for buyers, you need patience. Inventory is going to give you more choice. But if you're eyeing a townhome, be ready to compete. As I shared, year over year, it's up over 8%. If you're a seller, make sure you're pricing your property competitively. Take a look at what's happened over the last 6 to 12 months and do yourself a favor. Don't just inflate that number. Price your home based upon recent sales. The market will support you handsomely. If you're selling a downtown condo, manage expectations. As I shared, the market is down for condominiums, almost 2%, and it will take longer to sell. So just make sure you're aligned with the data and you're not disappointed if the outcomes aren't happening as quickly as you thought. If you're an investor, avoid oversupplied condo markets. Focus on family-oriented suburbs and townhomes where demand is holding up strong. Watch how first-time buyers move. Nearly 75% now rely on down payment help from family, which boosts townhome competition even more. Here's the comparison in plain terms. National resales are down 3.5% in 2025. Ottawa is up 3% year to date. National average prices are flat, whereas Ottawa average is up over 2% year over year. National inventory is swelling up, where Ottawa is a balanced 3.2 months of inventory. Ottawa isn't immune by any stretch, but it's more resilient. That's the key distinction here. So what does this all mean? Well, nationally, Canada is slowing down. Fewer resales, modest price dips, and more caution. But Ottawa is carving its own path. Balanced inventory, rising townhome demand, and prices still inching upward. If you're in Ottawa's market, buyers, choose carefully, but don't expect fire sale, especially in townhomes. Sellers, the right neighborhood can still drive strong results. And for investors, follow demand, avoid oversupply. The big takeaway, Ottawa isn't crashing, it's balancing. And that's an opportunity if you know how to play it. But here's where it gets really interesting. One segment raising eyebrows. I'm talking about condos. Are we seeing early signs of a condo market crash? Well, be sure to check out this video right here where I break down all of the numbers, the risk, and what it could mean for buyers and sellers and investors in the condo market.